Good morning. It is Thursday, June 20th. We skipped hump day, so nobody got humped this week. Hump. Nobody got humped. Where are we on the market? I just want to point out, I listened to The Compound with Josh Brown and those guys, and it was interesting. And Josh Brown put out a newsletter, and I will read it to you. The new high on the street is S&P 6,000. 6,000. What that would mean is SPY, which tracks it, would be 600. You are trading at 549. 600, up 10% from here. And that was from the previous low. The guy had like a 4,800. I forget who it is. Let me see if I have it in my notes, but I'll read the note. From the strategist who previously had the lowest target, now it's JP Morgan with the low target, with their chief strategist pointing to 4,200, which would be 420 on SPY, which would mean a full-blown bear market, 20% by year end. If JP Morgan is right, we will have an enormous fall and an enormous bear market. The good news is no one really knows what's going to happen. Year-end S&P 500 targets are mostly used as a framework for conversations between banks and institutional investors, not as statements of absolute fact. He's 100% right there. Oh, they're also great fodder for conversation in the financial media. Creating a target and laying out the reasoning is just part of the job. That's the whole reason strategists woke up in the morning. It's not their primary work product. No one actually makes investment decisions as though these numbers are the gospel. Take them as an aggregate, as a good gauge on sentiment, and that's pretty much it. So when you get the previous low, the new low is JP Morgan at 4,200, but the previous low was 4,000. That dude just raised it 2,000 points to 6,000. That means we're in a bull market, and that tells me that these guys have fallen behind and they just don't know where this market is going and they want to create some type of discussion. That's all that is. So take it with a grain of salt, but we are clearly in a bull market. Look at SPY here. I pointed out before that the previous support was 522. I would probably put new support at this little capitulation point at about 536 right there. That would be, I guess, your new support. You're kind of setting support up here at 543. Again, you're trading at 549. The MACD is super high on the oscillator. The RSI is at 76. You are overbought. At some point, you are overbought with a declining volume into the summer. And that's the problem that I have. At some point in time, we should see a pullback. I wrote in the newsletter, and I may be completely wrong. June's rally may set things up nicely for July. And the way I put it in there, and I included some charts, is that I think with July's gains at 100% on QQQ over the last, 10, 14 years, whatever I put in there, it's 100%, meaning that in that month, you're up on aggregate like 4%. And, play TQQQ for that. We did it last year. And so that's what I'm putting in you. I urge you to understand that I think we are just, look at RSI. I'm not saying we're going to have the 20% back down to 4,000 on the S&P. I am saying a healthy 2 to 3% in a pullback should start your buying. And it should start your buying in a fairly decent size. It doesn't mean that, hey, I'm going to go in, if you're dollar cost averaging and you're just doing $100 a week for the next 52 weeks to try and do, $5,200, or you're just putting stuff in, just buy it every Friday. Don't worry about the price. Just buy it every Friday. But if you're trying to use a strategy to get in there, the 4-hour algorithm, great strategy, because look, it had you in at 426. So that $5,000 that you saved up, you could have bought it all at 426. Doesn't mean that you were staying at 426. You could have seen a 20% pullback. When you saw this pullback in May, at the beginning of June, at the end of May, where you pulled back from 459 to 450, yeah, that was a pretty good time to buy. Right now, you're just soaring. And it's NVIDIA. NVIDIA's up another 3%. We'll go over why. SMCI is up another 5%. We'll go why. DELL is up another 5%. We'll go over why. We'll go over the top 10 picks for the second half of the year, according to Seeking Alpha. Now, I do want to point out Seeking Alpha, they're having a Seeking Alpha Investing Summit in New York. Dan Ives is there. There's a bunch of people. I would urge you to look at this list that I'm showing on my screen right now as to what happened at Seeking Alpha Investment Summit over the last few days. Includes Dan Ives raising the price target of Apple. Includes Joe Albano raising his price on Palantir and outlining that Snow, MongoDB, and Base will be beneficiaries of the AI. And that's REITs are boring, but a cushion for riskier investments. And it's all of these people at Seeking Alpha who have gotten up and spoken about this. You can see SOS. Cannabis is a $200 billion market cap industry. It says at the Seeking Alpha Investing Summit. So it was a summit that has a ton of articles around it. Intel would turn around for the ages to catch up in AI. Wedbush's Ives says at SA Summit. That's Dan Ives. Dan Ives says Intel will turn around. Will need a turnaround for the ages because, again, Intel's fallen behind. But I would urge you that I will include this link in the newsletter for free. Now, Steve Kress put out his top 10 picks for the second half of the year, according to the Seeking Alpha Quant. The Seeking Alpha Quant is get 40% off premium, 250,000 premium members, truck Seeking Alpha to provide. I get you $50 off. I get you $50 off premium. So use my link. But Steve Kress puts out his second half of the year for the quant. It includes stocks like SMCI, GCT, which I've invested in, GCT and GM. Those are three. The rest of the names, I don't even know what they are. You know, I have Kirby, Hercules, you know, again, the quant and Seeking Alpha, it finds me stocks that I know nothing about. How do you get this? You go to my link tree. This second one, Seeking Alpha Premium, 20% off and a free 7-day trial. So if you want to find, stocks, look first in the newsletter. You can look in the newsletter. The newsletter is free at dailystockpick.substack.com. You can read my notes every day. Sign up. You'll find a link to this article in today's newsletter. And you go in there and you look at it and you sign up for the free 7-day trial. Maybe you don't like it. Maybe you cancel. But I would urge you that this is a tool that I use on a daily basis to find new stocks to invest in. And the quant is just one of their greatest assets. Now, the biggest movers of the day, according to Seeking Alpha, NVIDIA. Stock continues to climb, jumping nearly 4% in pre-market on Thursday. It recently surpassed Microsoft and Apple to become the world's most valuable company. We'll go over this in a little bit. NVIDIA, Apple, and Microsoft are on a race to $4 trillion. Who's going to get there first? That's going to be the big question. I would argue that Apple might be the last one of the three to actually get there. Apple is my largest position. But do I believe that Apple's going to surpass NVIDIA? Right now, all the momentum is on NVIDIA's side. There are plenty of other places to make money in this market. But there's one place that you're not going to make money, and that's in shares of Trump Media and Technology. TJT extended a loss on Thursday morning, 7%, after tumbling 10% on Tuesday, following the SEC's declaration of the company's April S-1 registration statement as effective. The amendment, they're not making money. I've told you before, there are Waffle House locations that make more revenue, not just profit, revenue. So total revenue, there are Waffle House locations that make more than this. It's not worth it. It's one of those things. And I would argue again, make sure you know what you're investing in, because people came at me and said, hey, Fisker, it's a great investment. FSNRN, they filed Chapter 11. Yeah, they filed Chapter 11. On top of that, it's a worthless stock. And if we go and look at this stock, if you go and look at this stock, it is just upper left to bottom right. Yes, there were times where it popped. Yes, there were times that you could have bought this for a small little gain. But it made no sense to actually invest until the company started making money. Now they are bankrupt. And another example, Nikola, NKLA. Nikola, NKLA, they just filed for a 30-to-1 reverse stock split. That is because under $1, they would get delisted, and they need more money. So Find good companies. I mean, this is just find good companies with good products, good management, and good profits. You'll be okay. Where do you find those? You can find them at the Daily Stock Pick core portfolio. And Tuesday's entire episode was me going up down the list of technicals on the charts of this entire portfolio. If you haven't heard it, go over here to dailystockpick.substack.com. It's this top one. It's Tuesday, 618 pod. You can hear me go through it one by one. But Nicola Fisker, find good companies. That's it. NVIDIA ahead in the big tech race to $4 trillion as GPUs are tech's new gold or oil. This is good because it shows you a bunch of names down here at the bottom that should benefit from, they're just hanger-ons of the AI race. So this article is really good for you. I think it'll point out some stuff. I like that one. Let's look at a couple of companies that I've recommended over the past couple of weeks, just so people kind of know. The first one, Broadcom. Broadcom had a big pullback on Tuesday. You know, it kind of almost came back to this gap that it had caused in the 4 hour. Again, the earnings gap is from 1,500 all the way up to 1,644. We talked about that one. We see increased volume. You see an increase in the MACD. You see an increase in the RSI. The RSI got to 90 before it pulled back. It had a 1.45%. It's not a lot. Where's support on this one? Well, if you take a look at the weekly, I would say support is probably at 1740. That's last week's. Let's see. Last week's high was the close 1735. I would say 1735 is your support. Anything below that, I think you start adding to this name, AVGO. But it is extremely overbought right now. This is another name that, and I pointed this out for weeks. I said we're in this range. It was all the way from March, or late February. I started buying in March, and I started adding to this one, and I've been rewarded. Again, it's a mid five figures, 50, 60,000. It is a good amount of money that I've made on this, like 20, 30%, somewhere in that neighborhood. But I was adding the entire time. Those ranges are important for you to find out because as a good company, and you can see it here, even if we had pointed this out in July of 2023, and we said, hey, between May and August, and you see it in October, well, we broke out above that range. That means capitulation. Another stock that you can see capitulation on is SMCI. And we've pointed this out several times. I said, hey, it looks like it's upper left to bottom right. But when you look at the weekly, it looks like it's getting ready to pop again. Will it? It started to. Is it too late to get in? I don't think so. If we go over to Seeking Alpha and we look at SMCI, again, I have a lot that I bought at like $1,000. Am I getting out of it? No, because I believe that the future of this company is not overvalued right now. I think the momentum and everything else is with this company. It's a strong buy in the quant. If we go and look at Wall Street and we look, the average price target is 1,032. That is 12% up from where you are trading today. So do I think it's crazy? Do I think it's outrageous that this one gets up above $1,100? No. I think the momentum and the profitability, if you look at growth, look at this. Their revenue growth, 79% year over year. The sector's growing by 3%. That's just crazy. Now, if we go and we look at peers, this is what I want to look at because there's a few stocks in this that are actually doing. And this is how you use Seeking Alpha Premium as a proxy to find good names and stuff. NTAP is one. We'll do NTAP because I think they are one that probably deserves to be in here. So we're going to look at four companies. We're going to look at SMCI. We're going to look at HPE. We're going to look at NTAP, and we're going to look at DELL. So when you look at it, the only quant rating that's a strong one is SMCI. That's it. When you look at the price return over 1 year, look at DELL up 202%. SMCI still up 313%. HPE only up 28%. NTAP is up 76%. Now, when you look at the quant ratings, it's number one. It's all information technology, and you can see them ranked here. Okay, DELL is number 5. Valuation, you can see HPE is still a B. The growth is the problem with HPE. I would argue that that's about to change. And that's the one that I think is going to, everything else is a good one. When you look at the trading, you can see the 52-week price versus the 52-week high. You're down 4%. SMCI is down 25%. Dell is down 17%. Price versus the 52-week low, you're way up on Dell. You're not that close even on HPE. So I think HPE will start setting new 52-week highs. I do. I think that one's run. Look at this. HPE, 23% over 1 month. 3 month, 28%. 6 month, you look at Dell, you look at NTAP, and you look at SMCI. It's killing HPE. I think HPE has more room to run. We don't care about dividends. Dividends are nice. They're just kind of added to it. But it's giving a pretty decent yield, 2.38%. That ain't bad. When you look at revenue growth, that's the problem with HPE. Will they continue to lose revenue growth year over year? They have bad comps. So if they start making it up in the server space, holy crap, that's going to be good. Dell, tough comps. SMCI, really tough comps. NTAP, decent comps. But I think NTAP probably has more room to pull back, blah, blah, blah. We'll talk about it a little bit. Gross margin. Look at the gross margin. HPE, 34%. Dell, 23%. They got dinged. SMCI, 15%. SMCI needs to bring that gross profit margin up. That's the problem with SMCI and Dell, is their margins are just low. And when you look at this stuff, again, I'd argue that all of this makes sense, and it points me towards HPE might be the undervalued one to actually buy. But I'm in SMCI and I'm in Dell. Those are the two. Now, another one that I pointed out that we've gone off a little bit, Oracle. I said Oracle at 120. I thought it was a good buy. Didn't know what earnings were going to say. Earnings were okay. I think this one probably has more room to come back. But it is solid with the confirmation. Look at the algorithm. The algorithm got you in at 122. I said I'd be a little bit concerned on this, but watch it. After hours, as it started to fly, you could have purchased this at 125 or 126. That was a great opportunity to get into there. DraftKings I brought up. I am still holding DraftKings at about $26. I've said it before. This was when the Illinois legislation to start taxing or doing something against gambling, where it's like 75% tax. The overreaction. Any reaction in the market is an overreaction. This was your chance to buy. So, again, great opportunities to get into this. Now, this may be, when we're looking at Dell, HPE, and SMCI, NVIDIA is reploying plans to design server racks for its upcoming GB200 flagship AI chips, a job that server designers such as Dell, HPE, and Supermicro. It is just a rumor. So it's just a rumor. Just a rumor. Just be careful with this one. Let's see. Dell Supermicro gain, as Musk says, pair will provide servers for XAI. That's going to boost both of these stocks. Now, in the pre-market, SMCI is up 5%. Dell is up 4%. That is going to boost these stocks. There are a lot of money being spent out there right now. That's just out there on this, being spent billions of dollars by these guys. Again, I agree with Josh Brown. The biggest risk to this market is some hyperscaler like Amazon, like Apple, not Apple, but Microsoft or Amazon, somebody or Meta that's spending billions of dollars. If they come out, even if XA or Tesla comes out and says we have enough compute power, that's the risk to this market, because that's when you'll see a pullback on NVIDIA. That's when you'll see a pullback on Dell. That's when you'll see a pullback on SMCI. That's when you'll see the tech sector really start to pull back. Now, Meta's under 500. I think pre-market is at 503. KeyBank boosts target. We can look at this one. Meta, let's see. They went from 475 to 540. $540. Now, it is a hold in the quant. And the reason for the hold in the quant is its valuation. I would argue they're growing so much. Ignore that valuation. Buy it at 500. The growth is still incredible. You've got an election year coming up. This is just a buy. Where's the Wall Street price target? It's at 522. You're trading at 500. Buy it at 500. If we go and we look at Meta over here, it is part of the core portfolio. that you can see on Savvy Trader, that you can follow in Trendspider, whatever you want. Meta here at 475, buying at 475. Great trade. The algorithm makes you 113% over 24 months. It's a great algorithm to try and, protect yourself from the downside. Again, you have incredible strength in this one. The Bollinger Bands, look at that cinch up. Now, that tells me we're going somewhere. More than likely, it looks like we're going up. And the reason I say we're going up, we have confirmation above the 9-day. So again, just look at this stuff. Understand where you're going. Here's an interesting article with 12 of the best AI stocks to buy right now. Palo Alto, Tesla, Snowflake, ServiceNow, Adobe, Taiwan Semi, AMD, NVIDIA, Google, Meta, Amazon, Microsoft. 12 stocks. 12 stocks. Now, this is NetApp, NTAP. If you're going to invest in NetApp, and I would argue this is one of the good ones that you want to buy, Josh Brown goes over it. Why he bought it at a 52-week high. He says he could be wrong. He said you could see this one pull back. This goes back to the .bomb era. And again, it's network appliance stuff. This is what they do. And with AI, this is what they're buying. If a company's putting in servers, if a company's putting in stuff, this is what they're buying. Now, if we go back to the .bomb and you look at this, again, we're going back to 2000 here. Look, the high back here was 152. You're trading at 128. I mean, that's taken you 24 years to get back to that place. Now, is it crazy to say that NetApp is nuts? No, I mean, if you look at this one, it's not nuts. It's got a hold in the quant. It's got a hold on Wall Street. The average price target on Wall Street, 126. You're trading at 128. He said, I just bought it. It makes no sense that he bought it. He says, hey, it's probably going to pull back. I would probably look at it a little bit. The growth, again, I think this one's going to have a ton of momentum. I think that's what's going to bring it up there. The revenue year over year, I think it comes. Now, when we look at this one in the 4-hour algorithm, you make 100% over 24 months. This one, you make 99% if you buy and hold. The algorithm got you in here April 25th at $99. So if you were on the lookout for this one, if Josh was on the lookout for this one, he would have seen this gap and he would have said, you know what? I don't think the gap's getting filled. We're going to look at it at $99. He would have been in $30 cheaper. $30 cheaper. Am I buying into this strength? No, I'm not. I'm going to wait for it probably to pull back to either 116 or 113 or find other options. That's just it. But I do think you should listen to this for 2 minutes and 20 seconds. Josh has been more right than wrong on a lot of stocks. A lot of stocks. He got in and out of Toast perfectly. He got in and out of Dutch Brothers. Now this one, say for instance, you only have $1,000. Ross Cameron of Warrior Trading goes over why he chose $1,000, why he chose the broker that he has, how he trades. Understand, Ross is a momentum trader. You can learn a hell of a lot from him. His results are not typical. Absolutely 100% not typical. I don't think that you buy his course thinking that you go and make that kind of money. It's just not a good strategy for you to do. In my mind, I haven't taken his course. I've watched his videos. Again, I absorb stuff through video. So I like the videos that he posts. I like watching this stuff. You can learn a hell of a lot from the free videos. But understand, this is 100% technical trading. He doesn't care that a company is losing money. He doesn't care that a company, could be like Fisker is going to declare bankruptcy. He is 100% just a technical trader on a 1-minute candle. And so he does things extremely quickly. But this is a great overview. I think it's like 7 minutes or 20 minutes or something. Great overview of how he does it. The small challenge. Now, this is a great, again, I'm focusing on education here. We got Ross, and then I got Trendspider here. A high volume node in a strong upward trend often triggers a launch pad for higher prices. This is what Trendspider gives you. It's just a great visualization of what's going on. And you can see the volume shelf here points it to this is how I find the trading ranges. This is how I find the trading ranges. Is you go over here and let's just look at NVIDIA, for instance. Do I think that NVIDIA has a launch higher? We're at all-time highs. So it's super, super difficult to understand. But when you take a look at this, if we pull this, this is your volume by price, and you can scroll this thing. And this is what Trendspider gives you. If we just take this back to January of this year, where NVIDIA was trading at about $500, okay? Trendspider gives you the low of 60 and says, hey, the high is 90. Where's our support? Well, we don't know it. Right now, we don't know it. In this 4-hour time frame, we just don't know it. But I would argue that, look, this nice little bounce off here at about $95, $96, and you can see how it created some resistance here. It created some resistance there. I would argue this is a support level at about $94 to $95. I would also argue that the 115 level is a support level. So if you're looking to buy this stuff and we see a pullback, I would argue that the 125 is a good level. Again, you're looking at these volume levels to try and find out where these things hold, and Trendspider gives it all to you. Now, the problem is you're up into all-time highs, and it's super, super hard to find support levels because if this one starts to pull back, it will pull back quickly. Look at this RSI on the weekly at 85. It's not out of the realm of possibility that we see one. Look at the last time it was at 85. Where did we go? It was at 85 right here. Where'd we go? This was 2021 into 2022. We had a huge pullback on this. Now, it doesn't mean that we're in a different market. I don't think you see this. That was a 66% pullback. Now, the last time we were at 85 up here in June, we traded sideways. So it doesn't mean that we're going to have a pullback, but this one traded sideways. Trendspider is the greatest program to visualize this stuff for anybody who's looking to trade. How do you get Trendspider? You go to the link tree. It's the #1 link right here. And they have a special going on. 50% off, get 6 months free, $53. What do? You sign up using this link at the link tree. Then you go up here to the upper right and you're going to email me with a screenshot of your actual subscription. Once you subscribe, I'm going to send you a letter with all the links to import. And you basically import my 4-hour algorithm, the 65-minute algorithm, the 5-minute algorithm. You also import all my custom watch lists and all of my custom scanners. So everything that I do and I use in Trendspider, you get from day one. And for $500 a year, yeah, I think it's a no-brainer. But again, this visualizes it perfectly, and that's on a weekly chart. And you can use that. Now, here's another great strategy. Looking for a simple long-term strategy around QQQ, entry, 5 EMA cross up on the 10 EMA on the hourly, exit, 5 EMA crosses down on the 10-day EMA. Now, what do? Well, you can get this. So essentially, go to my newsletter. If you've got Trendspider, they provide it for you here. Import the strategy. And this is how you get it. You click on that link. This is all of my algorithm, all of my watch list, everything. You can see it right here. You just import it. You click on the link and you import it. Can't be made any easier. But that's a strategy on the QQQ. What do you make? Net performance over 34 months, 52%. Your average win, 2%. Your average loss, 0.91. It protects you. You only win 38% of the time, but it protects you from those bigger losses. And that's how you trade the charts. So I think it's interesting. I think it's a good one. I think it's, again, if I were to sign up for two things, it would be Seeking Alpha Premium and it would be a Trendspider. But you can find both of those for free other places. Make sure you have fundamentals and make sure you have technicals. That's what this entire podcast is about, making sure that you have the tools in order to succeed. Now, again, the core portfolio, go and follow it for free if you want that. Let's see. Somebody asked me, I forget his name. I'm sorry. Hims, long-term, interested to hear your take. Hims is a, what's it called? I mean, it's kind of like you get a doctor on your phone, and they're almost guaranteeing you a prescription. They're just gonna write you a prescription for like $50 or something like that. And they just started their GLP-1, and it's not actually Mounjaro or the other one, Ozempic. It's just a compound, so they have to find a local pharmacy. They ship it to you. Blah blah blah. It's not a bad one. It's just that generic version. And if you know generics, they work okay. There's no terms on this. We had a big pullback here where you saw this big pullback where the CEO talked about Palestine and support for the Palestinian demonstrators, and he took a hit. I said it's an overreaction. It's not going to make any difference. That was, I think, this pullback. Then they declared huge earnings. Then you had this pop for the weight loss stuff, and you've had continued strength. Now, MACD, super extended. RSI, 59. I would argue, is it a long-term buy and hold? I don't think so. I mean, what makes them so crazy different? Where's the moat? Where's the moat to get into here? It's basically just, cuts to neutral at Citi on recent rally. I mean, the valuation is the crazy part. I can't argue that they're growing, but they're not making money. They're not making money. That's the problem. When you look at the profitability, it's an A minus. Their gross profit margin, 82%. But overall, they're just, let's see. Let's go over to FinViz. HIMS. Because I do want to see the insider stuff too. They're losing $2.35 million. So forward PE, they should, again, if this company starts making money, you'll see a pop. Do I think it's a long-term? I'm not a fan of this one. I don't use it. I see their commercials all over the place. When you look at these people, they're selling. I mean, June 18th, they just the CCO, Chief Commercial Officer, sold $602,000. The Chief Commercial Officer sold $8 million worth back here in June. So he's selling a ton. Chief Financial Officer sold $2 million. Chief CEO sold about $10 million, it looks like. Again, they're selling in big quantities. Now, our director bought $2 million, and he bought at $17.74. Where are you trading right now? $23. So I would argue, I don't think it's a good one. If you use this service and you like the service, it's probably a good one. I mean, here's the pop rally, high of 25.40. That's going to be your resistance level right there, 25.40. Oh no, I don't want that. Hold on, I clicked on the wrong tool. There we go. 25.40. It's going to be 25. Yep, 25.40 is the high. So 25 right there. You're at 23 in pre-market. You're at 23.40. You broke through it on the last weekly candle, but that's the IPO. That was hype. You've got even more volume within the recent weeks, but your RSI is extended. Again, Jack from Instagram, CLS up to 60 today. Diamond hands. Thank you for going over it. I held my position. CLS is one you just want to buy and hold. This is an alpha pick one. This is involved in AI. Again, it's an AI story. I said, hey, the support level here is 48. If you get to this, load up. You didn't get to that. You took off. You pulled back from 60, and now it's pulling back. It's at 58.96. I think you could buy this one fully at 60, and still, for the long term, I believe we end higher at the end of the year than we are today. That means this one probably higher. But look at that MACD. I mean, this is the AI rally that you've seen this year. And this is from August of last year when they first started really talking about this one, and retail and hedge funds started getting into this one. If we go over to Seeking Alpha, I think it's a strong buy. Yeah, the quant has a strong buy. It's not crazy. It's ranked number 1. Electrical manufacturing services. It's ranked number 1. So again, I think Celestial, I think you're fine. I mistook it. I always mistake this, by the way, for Celsius. And then I badmouth it, and then somebody says, well, it's not Celsius, it's Celestial. Yeah, I bought this one. I have a very small position in it. I mistook it. Curious, Bisco from Spotify. Curious what you think about ALAR sell-off. ALAR, I think this is a... I don't know what they do. I had initially thought it was a pump and dump, but came to the idea I may have been wrong. The sell-off today, there's no news, odd. Seems odd. Let's see. I mean, that's huge sell-off. It was clear. Look at that. When you got to the highs, I mean, the MACD was crossing down. I don't know why you wouldn't have gotten it out of it here. If you've been in this for a while, I don't know why you wouldn't have gotten out. I don't know that it's a crazy good stock. It's a strong buy on Wall Street. We can look at it. The quant has it as a hold. This is a company that does system software. It's software. I mean, software has been, the average price target, $22.50. There's only 2 analysts that cover it, so take that strong buy with a grain of salt. There's only 3 Seeking Alpha analysts that cover it. So I would take this quant as a bigger thing and say, hey, at 36, look at this one, 36, they went from strong buy on 614 at 36 down to a hold at 34. And they went to a hold. I mean, again, the quant says it. Now let's see if any kind of news. I don't see anything. I don't see any news. I think this is 100%. The market cap is 191 million. There is 2 Waffle House locations that could buy this based on their revenues. So Bisco, great trade. Honestly, what does it deserve? What does it do that it deserves that one? I would say trade it. Let's see. Shane from YouTube. Hey, Gary, I was wondering about TJX. I'm a swing trader looking for stocks that are on the uptrend. One in particular is TJX that has good run so far. I might buy into strength, but it is overbought territory. The MACD is also threatening to cross down, but I think the 10-day SMA has been the support throughout this run. Given these mixed technicals and the poor news on the retailer sales, do you think I should buy into the strength or wait until the next pullback? Great podcast. That is just, you know what, Shane? High five, man. High five. That is a great analysis, and that is what this podcast should teach you: is do your analysis into the questions. Because TJX, fantastic, absolutely fantastic stock. This one and Costco have just done phenomenally well. Now, the algorithm makes you 71%. Buying and holding makes you 91%. So if you're one of those people who can't sleep at night knowing, oh my God, I'm into this run, should I buy it, blah, blah, blah? Well, you might want to look into the algorithm because the algorithm will take emotions out of that trade. It'll allow you to sleep at night. That's what it does for me. Now, if we look at TJX, you can see I would put the support level at about 90. Because when you pulled back, it pulled back to 93. If we just look at this line, and this is just me looking, look at how it pulled off of this at about, 93.78 right there. You can see how it pulled back. And that was the pullback from September into the October lows. And then it just rallied. But when it pulled back in March, it held that position. So that would be my ultimate support from a long-term perspective. Do you want to buy into this rally? I would say the 4-hour got you in. Again, we look at that support. 4-hour got you in at 95.27. You've had confirmation. You've even gone through earnings and you popped on earnings. You had a huge gap. It started to fill that back. I would have said buy it the 99 because we held confirmation. And I use the 9-day, not the 10-day. But the Bollinger Bands still seem, it's trading on the up end of the Bollinger Bands. I think you're right in that, the problem that we have is the consumer's weakening. And that's where I get a little bit antsy in things like this. And I've said it before, I want to sell Costco. I want to get the hell out of Costco. Costco is just tremendously expensive. But the second they announce a membership raise, which they haven't done in 7 years, and traditionally it's every 5 years that they raise. But if they do a membership raise, that's a $900 to $1,000 stock. And that immediately is a 9. So I'm not getting out of that one until it shows weakness or they announce a membership raise, one or the other. The only issue is the valuation on TJX. And the valuation is down there because they're just not growing. You can see the growth is a C+ as well. They're going to have tough comps. They're growing at 9.14 revenue growth. Earnings per share, let's see. Earnings per share year over year, they're growing 24%. So they're doing pretty well, but again, the growth is just not there. And that's what this is pointing out to you. The revisions, you have 18 analysts have covered it. 14 have said up, 4 have said down. 3 up on the revenues, 19 down. So would I buy this into strength? I think there's better opportunities out there. And I don't say that knowing that, hey, TJ Maxx is going to go down. But when you look at even Wall Street, there's 25 analysts that cover it. And it's $113 price target, 3% upside. Why would you buy something like that where you could buy SMCI? SMCI has a 2% upside. But again, it's an AI play. Why would you buy something like that where you could buy something like, HPE, which I think is going to get upgraded anyway. But again, their growth is the issue. Same kind of thing. We can look at Dell. Dell's got a huge upside to their price, downside to the price target. But again, TJX, to me, it's just, Costco is another one. I mean, Costco, I find problems holding on to Costco. It's the same thing. The valuation and growth. Look at the valuation on that one. Look at the growth. It's just not growing as quickly as they would. Even the PEG ratio, the price to growth. So I don't know that I'd necessarily buy into strength, because I think when you're buying into strength on this one, you're hoping that consumer that shops at TJX continues to buy more at TJX, or they continue, TJX buys more. I don't shop at TJX. I actually shop at outlet malls, but I do shop at Home Goods. So, Kelly, is AMAT a good stock to buy? If so, what's the right price? Can I buy long-term on this stock? Applied Materials is one that builds, I think they are part of the AI stuff. So, I think it's a good one to buy. Do you want to buy it when it's up so much? I don't know. I mean, my guess is, if we see a pullback on this one, on Applied Materials, you'd probably come back to about 222. That would be my guess. From a 4 hour, the algorithm had you in at 221. So I'd rather see you buy at 222 than 245. You look at this one, and the one, once it passed that 168, I mean, look at how clear that is, where it just pumped up there. It almost bumped up there in August. We pulled back. It didn't bump up there. Then it got through there. So your ultimate support level is probably that 165. But I would say if you're looking at other support, I think it's at that 188. But if you want to really start adding to it, I'd add it at the 213, 210 level. But again, we can look at Applied Materials here. Applied Materials, it's a hold in the quant, and it's the valuation. Again, it's this guy says, hey, yesterday, Noah's Ark Capital, it's a strong buy. If you want to read about that, they probably have a better analysis than I do. But it's the valuation and growth. When you look at the valuation, the PEG is higher than the sector. Growth, it's just not growing the way it should be. And that's what's affecting the valuation. When you look at this one, semiconductor equipment, there's other ones that rank higher in the quant. But this is the big daddy. I would argue that it's the, ASML is the other one. AMAT and ASML are the two big daddies in this. If you just sort by market cap, you can see they're the big ones. So at Lam Research, 142 billion. You can look at those. But again, the only one that's actually growing at a decent rate is ASML. And so I would argue that this one is probably a better buy based on the growth factor. They're growing at 7%. The revenue growth forward, 18%. So when you look at peers on this one, ASML versus AMAT, just look at their market cap and enterprise value, and then you look at the price return, ASML versus AMAT. AMAT has done better. So ASL might have more catch up to do. But, I'm not hugely into those. So I would say for long term, you're going to wind up higher than you are today. But semis are a super cyclical business. That's what I think the market is missing. Semis are a cyclical. If you remember, 2022, we had a semiconductor glut or a shortage. It ran up. And then 2023, that was when NVDA pulled back, was 2023. And you saw it just pull back into November. I mean, imagine buying NVIDIA at $400 here in 2023 when they had more chips than they could get rid of because they overproduced and everybody double ordered. That's the fear of semi-equipment folks. So scans. If you go to the newsletter right here, and you just scroll down to the bottom, what I do is I put in scans at the end. And the scans are stocks that provide you a good entry in the 4-hour algorithm. So if you have Trendspider, you can just pull up this this symbol and see the scans. Like, Disney. Disney had a buy-in. And Disney is at 101. Disney had a buy-in here on the algorithm at 101.12. So it's trading sideways. I would argue anything under 100 is a buy in Disney. For today, we have in the core portfolio, we have Goldman Sachs has a buy-in. Goldman Sachs has a buy. We're trading sideways. Now, this is a good bank. Look at this sideways trade, 456. The MACD is down below the oscillator. The RSI is at 60, kind of rising. They have earnings coming up later in July. Maybe that's a good one. Cleveland Cliffs. This one we've talked about. This one's due for a bounce. This one is due for a big bounce. I've talked about it where 1373 is the support level. Would I buy into this one? No. I would wait. I would wait until that 9-day starts to turn positive. I'd rather see you buy at 16 and wait for this one to pop to 20 than to see you buy at 14 and to pop it down to 13. So, Bank of America. This is one, buying under 40. At this point, just buy Bank of America under 40. 39.88 was the buy-in. Mara, which is a Marathon. I'm sorry. It is Marathon Digital. This is a Bitcoin miner. I own this one at about 26. Got you in at $20. We've talked about the support level being 18. It's trading sideways. Most of that stuff is trading sideways. APP is one that I've wanted to get into. AppLovin. This is one that got a pullback because Apple's new operating system, they put in something that's going to affect AppLovin's apps and stuff. Any reaction in the market is an overreaction. And now we're buying at $80. Are you buying in at $80? Well, that's highs, but it's not all-time highs. Your all-time highs back here are 100. And if we look at Seeking Alpha, APP, I believe it's still a strong buy. It might have changed with some of the news, but let's just say it's a strong buy in the quant. So there are opportunities out there. You got Lululemon, you got Chewy, you got Best Buy, you got Lemonade, you got Travelers, you got Veridisk, you've got Kraft Heinz, you got General Dynamics, you've got Citigroup. Citigroup, what I said, is one of the best banks to own because it's under it's only one. It's under its book value. Its book value is $90. This is trading at $60. So you got 30-40% upside on this one just to get to its book value if they sold it off for parts. And they announced some really good stuff last week, or I'm sorry, on Tuesday, I believe. You got leveraged ETFs, FAS, UMND, and you got spider sectors. You got XLB. This is the material sector, XLB. This is the material sector. And you can go over to Seeking Alpha and see what's included in the material sector. The algorithm makes you 47% over 2 years on this one. You make 13% buy and holding. XLF, are we finally seeing a turnaround in financials? We talked about Bank of America. We've talked about Goldman Sachs. We talked about Citigroup. XLF has a buy-in at 41.16. Now this one, the MACD is under the oscillator. The RSI is coming off of oversold territory. And XLP, this I think is consumer staples. XLP. Is the consumer coming back? Is the Fed going to lower rates in July and causing the consumer to soar? I don't know. Seems like a good thesis for me because there are things that are starting to break in the market with the consumer. If the consumer breaks, we are heading into a recession. So simple as that. Okay. Anything that you need, it's all on the Linktree, linktr.ee. Remember, Trendspider has a sale going on, 6 months for free. Seeking Alpha, you get 20% off, free 7-day trial. And if you don't want to do any of this analysis and you just want to look at some picks, you want 2 data-driven picks every month, it's Alpha Picks. Look at the performance, 122% versus the S&P at the same time was up 35%. It's 2 picks every month. They tell you when to sell. So if it gets into a sell territory, they tell you when to sell. They tell you when to trim. They've trimmed SMCI, ton of stuff. And they mentioned that I'm not allowed to tell you what the actual picks are for the next 3 months. So I have been scolded. So you may not be able to, if you ask me about the picks, I can certainly analyze them, but they asked me not to go over the alpha picks for 3 months. So, but SMCI is a long-term buy and hold. ANF is a long-term buy and hold. POWL is a long-term buy and hold. MOD is a long-term buy and hold. There are tons of these stocks that are 100% and above. They're just very, very good at picking them. And what they do is when they come down, they start to actually trim them in the portfolio. So you get a look at the entire portfolio. On day one, you get the entire portfolio. You get all of the analysis. You get everything. And when you look at the portfolio, you can see it's up 126% versus 45%. And they do this constant portfolio review. So it's really a really good program if you just don't want to do the work. I mean, that's what it is. If you just want to be spoon-fed, that's what it is. I like doing the work. So for me, if I were to pick 2 tools, it would be Seeking Alpha Premium and it would be Trendspider. So, okay, that's it. I will be back tomorrow. Tomorrow's Friday. We'll recap everything. Good luck. Hopefully you're making money. Okay, see you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.